That's what's up.
And
So,
today we have something very special for you guys. Today my boyfriend helped me secure $3,500.
$3,500.
You guys can see that.
They can see it. They can see it, baby. Look, you can even go on even closer. Good. Yeah, there you go.
There's the proof. So we're gonna break down and show you guys how we were able to achieve that today, this morning, in less than 20 minutes.
So I was on a copy trader, BTW. I was on a copy trader. That's why it looks like how it looks like, because it's spread across 4 accounts. So which is dope. We're still here.
If you guys need help logging on to the copy trader, drop a comment below so he can make a video about that.
The copy trader, yeah,
It's good stuff. Good stuff.
It's great stuff. So I'm gonna show you guys. Let's get into it. As usual, I gotta start from the 1 hour time frame because that's just the time frame we start from, right, babe?
Yes.
Right. I taught her well, It is what it is. Start from the 1 hour time frame.
Mark out your areas of interest that you want to trade in. We do not trade if it does not touch our area of interest.
Talk to him.
Hello. So yeah.
So I'm marking out my areas of interest right now.
The same areas he marked out right now is what I marked out on my chart. He did help me with that today.
You know what I do, man. Y'all know what I do, chat.
And the way you get these areas of interest is by looking at market structure on the higher time frame. What is market structure?
Watch my other videos. I don't got time to explain all that.
You can check it out in another video.
Yeah. I don't got time to explain all that right now.
But this is a crucial part of my trading career, is learning what structure is and figuring out areas of interest to trade instead of just blindly trading, because the market does whatever it wants regardless of how you feel.
That is a fact. So we're gonna bar replay tool, go back to around 9 o'clock or 8 o'clock, right before 9:30. Let's drop down to the 15-minute time frame. Let's draw the areas of interest. It was the 15-minute areas of interest that we took the trade off of, right? We did. We have an area of interest right here, and another one down here. But how do we maintain structure on the downside? We mark off the higher lows. So the higher lows is what maintains a downtrending structure. Because if there's no higher lows, then the market's making higher highs. That means it's not a downtrending structure, it's uptrending structure. So these are my areas of interest. I want to just draw one more area of interest, and then we'll drop down to the 1 minute time frame to look at the charts right before 9:30. So boom, we're gonna fast forward right before 9:30. Just hang with me. So right before 9:30, boom, this is 9:29. We went and we tapped that area of interest, right? We tapped the area of where markets, where we would like to get in for a trade. Hopefully we could take it like down here. But before I even get into that, let's just go back to the 1 hour time frame. If we look from the 1 hour time frame, we start from the 1 hour time frame. What does the trend look like? The trend looks bearish, right? We can agree that the trend looks bearish. It's dropping, it's creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. We can agree that the trend is bearish on the 1 hour, right? Let's go on the 15-minute time frame. On the 15-minute time frame, what is the trend? It's pretty much the same exact thing. Let's zoom in what it looked like for the day. On the day, you can see let's go from up here. We got the highs, we got the lows. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So we can see from the 1 hour time frame to the 15-minute time frame, we are dropping. We're bearish. The market is going on a downtrend. So would we be looking for buys right now? No. Why? Because it doesn't make any sense looking for buys when the higher time frame is clearly showing you that the market is selling off. So why would you not just take sells? That's like the best thing to do. When the market is showing you one thing, just stick to it.
Something I've been struggling with is going against the trend, and that's been, hurting me in a way. But, after looking at my journal, my trading journal, and reflecting and back testing, I recognize, okay, no, it's a bearish trend. Why am I taking buys and only looking for buys? So today we saw a bearish market, and we're looking for sells.
What is the trend?
The trend is bearish.
But what is the trend?
The trend is the structure.
The trend is your friend.
The trend is.
The trend is your friend. It's all right.
The trend is your friend.
The trend is your friend. It's always going to be your friend. It's best to stay with the trend because the trend is going to tell you where the market wants to go, where the big money is taking the dollars. Sometimes it doesn't actually do that, or sometimes it just goes crazy. As you can see, Trump markets is just a little different than what we're used to, but nonetheless, the trend is your friend. Right? Now let's draw back down to the 1 minute time frame. If you see on the 1 minute time frame, price came back to this area of interest. And what do we see from the 1 hour time frame to the 15 minute time frame? We saw a bearish sell-off. We saw price dropping. So we jump on the 1 minute. What are we looking for? Sells. Just makes sense. We do all of the top-down analysis to jump on the 1 minute to take entries, not base our trade based on the 1 minute. We base our trade off the higher time frame. What is the higher time frame doing, and how can we capitalize on the trade going lower on the lower time frames so we can execute with a tighter stop loss and have more of a risk to reward ratio on the trade that we're taking. So this is 9:29. If we go to 9:30, boom, show you what 9:30 look like. 9:30 had another push. So usually my trading strategy, this is what my trading strategy look like usually. Right, I'm waiting for price to come down, break structure, like not break structure, break the candles low and close. So I would wait for another candle to like do something like this, come down, close underneath the body of this candle, come back, retest it, and then drop. That's what I'm usually looking for. So if we look at this trade right here, we're gonna see what happened. So the next candle came down and it closed, right? It gave us a candle closure. But what happens? What happened afterwards? It just kept dropping. It just kept dropping.
So now we're going to try a new entry model that we've been working on. And we think it'll be very beneficial. So check it out.
Right. New entry model. So it's the same exact thing. Only we're going to take the trade aggressively. So as soon as the candle closes underneath the last bullish candle in the area of interest, obviously we need it to be in the area of interest. We don't take trades out of the area of interest. We need it to be in the area of interest. So when the candle closes, this is the candle that closes, right? Let's backpack a little bit. We're gonna take the trade as soon as the candle closes. So this would be the entry, and then boom, we would have got tapped in right here at 9:31. The 9:31 candle that closed right here, we would have got tapped in as it was dropping. And it's dropping. So we did still catch the trade. We promised you. We caught how much this today?
3,500 in less than 20 minutes.
3,500 in less than 20 minutes today.
How long does it take you to make $3,500?
Right. So we really asked ourselves. It really does take a long time to make 35, especially if out of our jobs, 95, whatever. So we missed the trade. One thing you have to know: if you miss a trade, there is another trade. There's always another trade. It may not be today, but there's always going to be another trade. It could be tomorrow, next week, next month, whatever. There's always another trade. Just wait for the next best entry. Don't force it. Don't have FOMO. None of that. So we waited for the next best trade. The next best trade is the trade that now we see that price is back into another area of interest, but it already sold up from the high and went to the lows. So now this trade is a little bit more risky. Why? Because we're taking it at the lowest point that price has been to for the day. Not even just for the day. Probably for the week. Nah, it was just for the day. But you can see last week just continued to drop. So I would say just for the day. All right, this is the lowest price has been for the day. Let me bar replay 2 again so we can get back to it.
And boom. So the trade he's about to show you guys again now is the trade that we took this morning.
Right.
And
we're talking that trade. 20. Yep, that's the same trade exactly.
So we missed that first trade, but now we took the second one, and that's where we were able to take profit.
Which is the next best entry. We just waited. All you got to do is wait. Have
Patience,
patience.
discipline, freedom.
Patience do what? Patience pays. Yeah. Give me some.
We gotta work on that.
We got to work on that. It's all good. It's all good. It's all good.
The trend is your friend, and patience pays.
There we
Come
go.
on, come
Very
on.
good. Talk to him.
Talk to him.
Hello. All right. So, markets dropped. Boom. We had a pullback, right? This is the pullback, right? We got a pullback in our area of interest. So we're saying, okay, now that we got the pullback, we already know markets is falling. It already went below the lows. So there is a probability that the price can go up from here, but it's not high. The probability that it continues to drop from here is higher than the probability of it going higher from here. First of all, we have no fundamentals for the day. 2, it's not in an uptrend. 3, it just don't make any sense from the higher time frame to the lower time frame, which we did, but top-down analysis. So from top-down analysis, we know it's supposed to be dropping. So what we did, we prepared for price to close. Once it closed underneath here, wherever the next candle opens up at, that's exactly where we're gonna get in. So boom, we're gonna wait.
We did a lot of waiting.
We did a lot of waiting.
Patience
We did a lot of
played
waiting.
a real key factor.
Yeah, yeah. Did
The
a lot of
old
waiting.
me would have traded right here trying to go up. No, we're not
Yeah.
about that. We're growing.
Patience.
Patience.
Right, right. So this was the candle. This is the candle that formed underneath this last bullish, what is this? Yeah, bullish candle. So this is the candle we was waiting for to be closed under. Oh, that looks bad. Sorry. Let me get a line. So yeah, right there. Once price gets under here, whatever candle closes under here, we're pressing sell. So we press sell as soon as the candle closes. Boom. This candle closes, the next candle opens. Boom. We're in. We had a stop loss of about
40, 50 points.
that was like 90 points.
But I only use one contract.
Yeah, one contract.
I
So he's
still
risking about like
minimize my risk.
$400 or something like that. Yeah, he was risking about $400 on this trade. Something slight, something light. Trust me. Last week, the stop losses were like 160 pips, 150. It was crazy. So to be back under hundreds, I'm grateful.
I'm good for this range.
Yeah, I'm good for this price range. So anyway, last week I was risking about $900 with one contract. Crazy work. Anyway, this is the candle we got in. So we got tapped in right at 9:44. So let's do the math. Let's do the time. 9:44. When did we get TP1? We got TP1 at 9:58. So what is that? About 14 minutes? Yeah, about 14 minutes. So it took 14 minutes for TP1. And then another 4 minutes for TP2. So yeah, that's about 20 minutes.
That's what we got on.
Yeah, so that resulted in $800 and something for about 4 accounts, would equated to about $3,500. So solid, very solid trading day.
And just so you guys can see, like, we'll go right back here where it closed.
Yeah.
We'll go the next candle over, and then sell. Just so you guys can like see it for your own eyes, what was going through my mind when I was taking this trade. And
you're basically mapping it out.
Yeah. So then we'll play this through so you guys can see. Like, I was doing good, I was breathing. The market shot back up right here, went about a negative $100, but I still was being patient. And as we always do, we manage our trades very well. So once we hit TP1, we moved our stop loss.
Stop loss to break even.
even. So now we're up $40 regardless
Can't
of what
lose.
this trade. Yeah, regardless of what this trade does. And then, of course, we
Boom,
took profit
TP
for
hit.
today.
Slap. So that's how I helped my girlfriend make about $3,500 a day. Boom.
Boom.
Yeah.
It takes me a really long time to make $3,500 at my 9 to 5. So
Yeah.
trading is a beautiful opportunity to get financial freedom, and we are ready and willing to put in the work to get there.
Right.
Nobody's going to do it for us.
Yeah, nobody's going to do it for us. So we got to do it. Hopefully you learned something. If you have any questions, please leave it in the comment section. Leave a like and subscribe. Follow my girlfriend at the Kaya Janae. That's the TheKaiajanae.
Boom.
Peace.
Happy birthday.
Oh yeah, I'm 28 now. Happy birthday, belated. My birthday was yesterday. Ace, what up, Ace? What is good, Ace? Hey, Ace, Ace, Ace. Good, my guy.
Hope you guys
I'm
have a beautiful day.
I'm hopping off this though, Ace. Love you, bro. That was what,
Fun.
17 minutes. Average viewer duration.
You send it to me so I can put it on my
Total
story?
watch time.